Okay, so what did we say in our last analysis for AUD JPY? Now we said and we realized that the market around this area had very strong support, confluence of support given by this structure that was previous resistance, now turned support at this area, plus we had this counter trend line that had yet to be broken to the downside, and the possibility to create this impulse correction and impulse pattern to the upside. What we also said is that if the market would have managed to break all this structure support to the downside, then all this support would have been turned resistance, and after the break we could possibly be looking for shorting opportunities after the break and retest of this level. But the market never wanted to break this level. In fact, it never broke it, it just continued to the upside. So as we said, we were not really interested in this move to the upside, so just stayed on the sidelines on the pair, as you know. Now, from our weekly perspective, we have to readjust our overall view on this pair. We have to adjust to the ever-changing market structure. So let's look from a weekly perspective what we have now. Now, on the weekly time frame, we can see that the market is approaching this pretty strong weekly resistance. It was previous support here, which is now turned resistance from a weekly perspective at this area. What we also have is the confluence of the 0.786 Fibonacci retracement with this previous support, now turned resistance from a weekly perspective. So on the weekly, we have this confluence of resistance around this area, which the market can easily respect. Now, if we go and see what we have on the daily, we can realize, as we have just seen, that the market continued and completed this impulse correction and impulse pattern to the upside. But in completing this impulse correction and impulse pattern to the upside, what the market actually did is create this overextended W formation. Now, after an overextended W formation, what do you expect? You want to see the market make a move to the downside and go and retest the neckline, which is exactly what we expect the market to do here on AUD JPY. Now, at the moment, what we have now from a 4-hour perspective, everything is bullish. The market is creating higher highs, higher lows. All the structure of the market is bullish. So looking for a short now just makes no sense. It's too early. We have to wait for the market to show us that it actually is ready to complete the W formation, because specifically in an overextended W, you don't know how much the market wants to overextend to the upside. The only way to know it is to monitor price action from a 4-hour perspective and wait for the market to shift from a bullish market to a bearish market. So we know that from the weekly we have resistance around this area. We know that from the daily our target zone and completion zone for AUD JPY is here. So if the market will go higher, and the higher it goes, the better it is, because we will get a better risk to reward to the downside. If the market will continue to the upside, what we will be doing with students, how we will be approaching this pair. We will be monitoring price action from a 4-hour perspective inside of this area with students, waiting for the market to provide to us one of our valid entries. And if the market will provide to us one of our valid entries, then we will be taking a nice short with a good risk to reward and good probabilities for a nice move to the downside. Now, if we go and take a quick check at what we have from a COT perspective, so what hedge funds are doing on AUD and on JPY, there are definitely some interesting things that we can see. Now, from an AUD perspective, we can see that with the last report, hedge funds have added another 2.1k short positions, bringing shorts at 59k at longs at 23k, so at minus 35k net positions. So AUD pretty weak, and anyway, in a situation of uncertainty like the one that we have at the moment, you want to see money flowing at the JPY as a safe haven. Therefore, you want to see JPY getting stronger in the long term, which aligns perfectly with what we want to see from a technical perspective on this pair. So if the market will continue higher, we will be waiting with students for the market to shift from a bullish market to a bearish market from a 4-hour perspective, and as usual, being reactive and not predictive. And then we will be waiting for the market to provide to us one of our valid entries. And as soon as the market provides to us one of our valid entries, we will be taking a nice short with a very good risk to reward and probabilities for a nice move to the downside and completion of this overextended W formation. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.